right now is, of course, Bajaj Auto and the kind of 10% cut that we're seeing on the stock. Gurmeet Chadha is joining us to help us understand what exactly is going wrong here. Gurmeet, does it warrant a 10% cut with the kind of earnings it has reported?
Anisha, hi. I think there is if you see operationally, there's a slight miss in led by lower ASPs and slight miss in margins, largely led by, bit of a commodity inflation, mostly copper. Steel prices were okay. And I think more the commentary that the initial trends of festive seasons have been a little slower, which is 1-2% against what the market was expecting. And they are guiding more like 5% versus marketing expecting 8-10%. And when you are trading at 30, almost 32, 33 times FY26 earnings, any such miss and any such commentary, obviously, and the stock has run up, since they announced buyback. It's been a stellar rally. So that's the reason I think there's a bit of a disappointment coming in. But the good thing is that the export, they are guiding a good number, especially the LATAM market is doing well. Even Nigeria numbers are, they're improving from the low of 5,000 units they were doing earlier. And I think they have a very good platform. They have CNG, they have, Chetak. They also have, three-wheelers on the electric platform. So it's a much wider, much robust platform compared to others. So I think it's a bit of a reaction, and it's logical if you trade at high valuation. Nothing really structurally to be very concerned about, to be honest.
Gurmeet, what's the bone of contention, or rather the core problem here? Is it the outperformance that has already happened in the stock? Is it the, sort of earnings miss? Or is it more that there is no visibility of this kind of earnings momentum to continue going forward?
You rightly said it's a bit of both. It's a miss. When you, as I said, when you trade high multiple, when the stock has seen a great run up in last 6 to 12 months, any miss is obviously not welcome. The valuations have to justify growth, and we will see that this quarter earnings with a lot of counters where valuations are rich, and if numbers don't come in, there will be disappointment. Second is more the guidance and the outlook. I think market was expecting a 10% kind of a growth. This is the best quarter for the entire auto sector, and that's the reason. If you see, even ancillaries have been under pressure. If you go down and map the value chain, look at an Uno Minda, look at a Sandar, look at Sona, look at most auto banks, they have been under pressure in lead up to the numbers being slow, especially after the September numbers came in, when the overall industry data came. So I think my sense is a little too early to comment on festive season, because I think we are just at the not even midway of it. But if the trend continues, then obviously there could be a little bit of derating in auto stocks, because none of them trade below 25-30 times.
Okay, so that's a take coming in. But, festive season sale that you're talking about, this is something which has been highlighted by MK as well in the brokerage note. They're saying that the two-wheeler retail growth has been muted, 6.7% YTD, but September-October has been 5.7%, with market share loss coming in for the company. And management expects FY25 industry growth to be closer to 5% than 8%, which they were talking about earlier, if the ongoing below-par festive performance really persists. You're calling it a bit too early to read too much into the festive season sale, Gurmeet, but if I had to ask you the pecking order, given the likes of TVS and Hero and whatnot are also declining 5%, which is the stock that would be your first go-to name and you would like to buy on a correction like this?
So amongst two-wheelers, I think we have TVS. We have TVS Holding also, which is the holding company which we bought, and Sundaram Clayton in the portfolio. So TVS would be first, followed by Bajaj. Also, as I said, I'm more interested in the auto ancillaries, including names like Sandar Technologies. And the correction has been, if you see, 20-25% in most counters. Uno Minda, for example, is down, although Uno Minda 60% is more towards four-wheeler in terms of, the mix. Sandar probably 60-65% is two-wheelers. So they are down about 20-25%. And I think some of this commentary will get built into the price very quickly. Market these days are brutal on downside as well. And obviously they reward you. We have seen that with another auto anch stock yesterday, which is Precision Camshaft, where we saw, there are 2 days back to back, upper circuits coming in. So I think any good performance gets rewarded disproportionately. Any bad underperformance is getting discounted too quickly. But if it's a further 10-15% correction, maybe TVS Bajaj amongst OEM and Sandhar and Uno Minda, in auto anchors.
Does it seem that for the year at least, the two-wheeler pack may have actually topped out in terms of a market performance?
Could be. As I said, if earnings are where they are, I don't think so there'll be much improvement, because as I said, the valuations are rich. Even if you look at, I think the only one probably which is relatively cheaper is Hero. But the numbers again there have been also pretty flattish. Even in four-wheelers, if you even Hyundai IPO, look at for example, passenger vehicle, that's also priced at 26 times. M&M is about 28, 29 times. Maruti is also roughly around the same. So I think there is not much room for earnings disappointment. And if earnings are flat, I agree with you, the near-term upside could be capped.
Let you go, Gurmeet. A word on the Hyundai IPO as well, because I mean, yesterday afternoon there was that bit of a worry in the market when it was subscribed only 22%. By last evening it was 42%, but right now also it's just 43%, and the retail and HNI participation seems to be missing. What's your view on Hyundai?
See, the retail participation is also a function of the grey market premium, and once they increase the size to almost 27,000 crores, and all of it is OFS. With the valuation it has, I think there's very little left on the table, to be honest, considering the numbers which are coming. And even if you see Hyundai, while they were able to do higher revenue growth, double-digit CAGR, but it was led by product mix. The volume growth again has been low single digit, and some of it was conscious. They wanted to slow down on sedan, and it's a great company. They are well entrenched in India, 15% market share. I think the Creta EV could give them a bit of an upside. But I think it's there in the price. So there's nothing from that I'm in a rush to buy the IPO right now. If you see the parent, it trades at 5 earning multiple. And this IPO would contribute 40-45% to the market cap of overall Hyundai. So there's not much on the table, but it's a decent stock for medium to long term. Look at it from a 15% kind of a return expectation over long term. Then I think it's good to go. But I'll be happier if I get a bit lower entry point post-IPO. That's a personal view. You may not get that. Second, I think there is some cannibalization which will happen because of Kia, because there's a lot of overlap, especially in the mid-segment of the MEVs and SUVs, especially Sonnet and few models which compete directly with some of the models Hyundai has.
Thanks so much, Gurmeet, for joining us and talking to us about the entire auto sector, two-wheeler, Bajaj Auto, TVS, Hyundai. What are the views coming in? That's a 360-degree analysis on the auto sector and what's the impact of the slow festive season start at least. That's the view coming in. A quick look at the market.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits and then break right through them. Become something more. It's my time to rise.